What is it today? Is it still stimulus? Is it the president's health? It's not a huge move anyway.
It's not a huge move, and I think the big takeaway, Joe, is also that markets are operating in an established range we've been in for a few weeks with dramatic headlines, but relatively controlled market action. And I think we have to be careful about attributing it to one thing because the market was already trying to kind of chew through all these probabilities, whether it be policy, politics, everything else that might come down the road. So here's the S&P 500 year to date. For more than 4 weeks, we've just kind of been in this box, 3,200 to 3,400, kind of nudging up toward the upper end of it right now in the pre-market action. So this is going to be a similar pattern that you're going to see in other asset classes, too. You've kind of had this kind of sideways move through September, a little bit of a pullback. Things are more in balance right now, believe it or not. Take a look at the 30-year Treasury yield. Here's one that's also nudging against the upper end of where it's been for most of the last few months. Over 1.5% right now. This perhaps is also establishing some kind of higher probability of stimulus. Who knows what it means on the political front? But I think it's very important for people to recognize the markets for months have been kind of bracing and clenched up in advance of the possibility of some kind of political change coming around the next few months. That's why whatever the actual specifics of going on in the news right now, that hasn't changed. That process of figuring out the probabilities hasn't changed very much. Volatility index, very similarly, up off the low from August, and also, now this is a little bit of a less dramatic chart because it has that springtime spike on it, but basically pushing up toward the 30s, definitely kind of two-way risk is perceived in the markets right now, but I think it's very compressed, maybe coiling towards something. I don't know that we're going to wait actually for Election Day to have a little bit of an effort to break out of this range, guys.
At the same time, Mike, VIX priced out through December, so after the election, remains elevated. So the curve on the volatility index seems to tell a different story from what we're seeing, at least in terms of the box that the markets have been in.
Well, it tells a different story in the sense of what protection traders are willing to pay for. And for months, you've actually seen that high premium that investors are paying for protection against the volatility storm, October, November, and maybe extending into December. And so I think you can say, yes, the markets are definitely positioned for something like that. But what does it say that the market's already been positioned for something like that for a few months? That's the question you have to figure out as to whether, not that everything's priced in, but that nothing is necessarily going to blindside this market because we've already been tensed up.
Shepard Smith here. Thanks for watching CNBC on YouTube.